In this video, we'll be taking a look at a few chart analyses to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're interested in learning trade forex like professional, check out our complete forex trading course on Udemy. I have the link attached in the description below. We have over 4,000 students enrolled right now, and I can assure you that you're going to learn a lot, and it's going to help you improve as a professional trader. This week, we'll be taking a look at 4 different charts. So, taking a look at gold, Nasdaq, US500, and crude oil. So that's what I'll be focusing on this week, because that's where I see the most potential for good trade opportunities this week. So my screen here, we're starting with the gold chart on the 4 hours time frame, and what you can see is slow grind to the upside, solid bullish trend. And in this type of market, it's kind of difficult to spot out where you're gonna get into this trade opportunity for a long position, right? Because you clearly want to go long in this market setup. So in this type of setup, you want to go long. But what matters the most is where you place your entries, right? So 2 bullish case scenario for me will be: 1, waiting for price to consolidate around its price levels and give us a solid breakout above this sloping trend line. So this is the resistance level of the current trend. We have price creating lower highs, right? So lower highs took a range, so that's the blue price level you can see on my screen here. So when we get more consolidation, we get a good breakout above that price level, that will be 1 case scenario to go long. And you could take these lows as well, and this gives you some sort of a symmetrical triangle, right? So lower highs, higher lows, symmetrical triangle. So price could break either to either direction. So we could either see price consolidating within this range and giving us a bullish breakout, or we could see price consolidating and giving us a bearish breakout, whichever the case may be, right? But I'm more concerned about going long, so that's why I'm more bullish on this setup than bearish. So first case scenario will be waiting for price to consolidate more within this symmetrical triangle and then give us a bullish breakout to the upside. Then I'll be going long. Entry will be immediately after the breakout, of course. Stop loss will be underneath the consolidation and leads to the breakout, while we trade our positions to go higher, because this is a clear bullish trend and we're currently in price discovery because gold is currently at its all-time highs, right? So second case scenario will be waiting for price to break to the downside, coming back to this trend line, and then we're going to look for opportunity for a bounce to go higher. So this is another case scenario to go long. So this would give us a tighter risk to reward ratio, because as we bounce off of the trend line, entry could be after the bounce, stop loss could be underneath the retest of the trend line, okay, the test of the trend line that leads to the bullish bounce, and first take profit target could be around its highs, while we trade the rest of our positions as we go higher. So this is my 2 bullish case scenario for gold right now. And talking about bearish case scenario, I would simply have to wait for price to take out this major trend line, so take out this symmetrical triangle, consolidate around this trend line, and take out this trend line as well. So this would be a much better bearish case scenario for me to go short, aiming for these lows over here. So I'll be aiming for these lows if that happens, or this area of value. So there's another one over here, right? So that's my brief outlook for gold right now. So I'm just going to draw this quickly. So yeah, this is the price level I'm talking about. So if we take out this trend line, then this level is what you want to watch out for a potential price target for a short. Well, I'm more bullish than bearish. So if this happens, I'm going to go short. If the other 2 case scenario we discussed earlier happens, then I'm going to go long. That's how I'm going to trade gold this week. Other than this, I'm just going to wait to see what the market does, see how the market reacts to price action and price movement. Then I'm going to take my positions as my confirmation kicks in. That's the brief for gold. Moving on, we'll be talking about Nasdaq. So Nasdaq, we discussed about this last week, and I talked about the possibility of price coming all the way down to retest this area of value, and we had that, and you can see the sweet U-shaped reversal pattern, right? So taking this trend line across these highs, you can see we broke out from this trend line, and I think we are likely going to go higher. My price target for this first price target is around these all-time highs. Second price target will be trailing my positions to go higher, because by the time we get here, we would eventually become we'll eventually be trading in a price discovery, so new highs, right? So for a trade entry, if you're not in already, I'm in on this trade around these price levels, but I took in another trade late on Friday. If you're not in, you can go in when the market opens please ensure to use strict risk management. This is not financial advice. This video is meant to serve as an education purpose only, right? So if you're going long at these current price levels, the logical price level to set your stop loss will be underneath these lows, right? So that's why your entry should have been probably around this price level, but it wouldn't have been a better confirmation to go in here. But since we've had a good confirmation to go in at this current price level on the 4 hours chart, of course, logical price level to put your stop loss will be around these lows for safe, safeguarding your trade, and that will be approximately 250 pips, I think. Oh, that's approximately 500 pips. So that's why I said good risk management. So this so much risk for trading Nasdaq, right? But if you're having a good risk management, then you should be able to take this trade with low risk. First target is going to be around 700 pips. Good risk to reward ratio in my opinion. And I don't think we're going to come all this way, but you never know. Market can be crazy sometimes, so that's why you trade with good risk management. And if you trade a position as you go higher, you could aim for 1,000 pips. So this will be at least a 1 to 2 ratio trade if you wait for 1,000 pips for your TP, right? And that's going to be a psychological level because it's going to be the $21,000 mark, right? So this I'm going to trade Nasdaq. I'm not looking to go bearish right now because both fundamentally, technically, it's all pointing to the upside, right? That's the reason why I'm bullish on Nasdaq, and the setup here gives us a good confirmation that we're likely going to go higher, right? So if you're too scared of jump into a trade for 500 pip stop loss, your entry could be at the open of the market. Stop loss could be underneath this candle. So I'm going to go down to the 1 hour time frame so you can clearly see what I'm trying to explain here, right? So on the 1 hour time frame, you can see we've clearly taken out this trend line, right? So this trend line we could see on the 4 hours time frame, and if you jump in when the market opens, your stop loss could be underneath this candle over here, right? Because this is the lowest candle we had, lowest rejection we had before we properly closed above or traded above this trend line, right? So if you take your stop loss around these price levels, that will put your stop loss at approximately, let's see, so this will mean your stop loss will be approximately 250 pips, which is also a decent decent risk management for a potential 700 pips price target. So that's going to be 1:3 essentially, right? So a risk of 1:3, in my opinion, is a good one for a an asset like Nasdaq, right? So that's how I'm going to trade Nasdaq. Meanwhile, also know that there's a good chance market opens, will pop up a little, we reverse to the downside, coming as low at these price levels before eventually going higher. Markets can be crazy like that sometimes, okay? So don't take my word for it. Stick with your strategy, do your own homework, stick with your risk management strategies, and go in when your strategy and your analysis gives you that confirmation to go in, right? But for me, I'm already on this trade, and I'm going to be holding my trades till we get to all-time highs, and I'm pretty sure I'm going to share my results in our Discord community. If you're not part of our Discord, use the link in the description below to join. I am going to share my results on this trade when it plays out, or if it does play out as we expect, right? So I'm not going to be going short on this. I don't see any reason why. You could argue that there's a good chance we come over here and consolidate and break. Very, very possible, very likely, but I'm not watching out for this. I won't be going short. Even if it happens, I'm just going to ignore, watch the market, see what it does, and reevaluate my analysis. So for now, I'm going to remain bullish, and I'm going to wait for this trade to play out as I expect and see how it turns out. But for you, this may not be the right trade for you. If it isn't, please don't rush it. Don't try to force the trade in. But if you're going to take this trade, employ good risk management and stick with your trading strategy, right? Moving on, I'm talking about US500, similar to what we have on Nasdaq. I discussed about this last week as well, waiting for price to come into this area of value before we look for opportunities to go long, and we did get our move. You can see sweet retest followed by a U-shaped reversal, good confirmation of a bullish movement to come. And if you're not in on this trade, now is a good time to also get in. But the issue with US500 is that the pips are so huge, the movement's crazy. So I'm going to show you an example. So taking this trade here, logical price level to set the stop loss will be underneath these price levels, and you can see that's already 1,000 pips, right? So if you are having a good risk management, this shouldn't be a problem for you because you go in with very little risk as low as, the lowest lot possible, which will be equivalent to your 0.01 lot possibly, and you could aim for a 2,000 pip movement, because when this moves, guys, it's gonna rip really hard. So this is the 4 hours time frame, and if you're interested in taking this trade, this is something to watch out for. I don't see any reason why you want to go short. It doesn't look like a sell setup in my opinion. Just taking a broader look at this chart, it looks bullish, extremely bullish. Higher highs, higher lows, currently trading around this area of value. Had a good retest now, good reversal. So I think we're just going to go up, all the way up, right? Except something unexpected happens in the United States economy, then this will eventually go down. But other than that, everything looks good right now, considering the fact that we had strong NFP data on Friday. So this means it's a good chance we go higher. So going down to the 1 hour time frame briefly. So 1 hour time frame. Yeah, so if you go down to the 1 hour time frame, good price levels to have gotten this trade was taken around these price levels. So at the break of this trend line would have been a good opportunity to get in on this trade. So that would be entry around this price level, stop loss being around underneath these lows. So that will be approximately what? So this shouldn't be up to 1,000 pips now. So this will be approximately 600 pips. Decent trade opportunity in my opinion. And you can aim for TP as high as 2,000 pips, which could easily play out within a week or so, or 2 weeks. So that's it briefly for US500. However you wish to play this, if you wish to jump in when the market opens, if you wish to wait for a reversal to the downside, all that matters is taking on this trade with a very minimal risk, right? You don't need to risk too much to make decent profits on Nasdaq, on US500. That's the S&P 500. Just going with little risk, set your stop losses, place your TP, trade your entries, and enjoy the ride as it goes. If it goes to your stop loss, fine, we'll move on to the next trade, right? Lastly, we'll be talking about crude oil. So crude oil, we've been following this for quite some time. This is a daily time frame, and we seem to have a confirmation that this is likely going to be trading within this range for a while. So you can see a clear area of resistance, clear area of support. We just bounced up the support level, creating higher lows, and we had this massive move to the upside, taking out this area of value. So I'm going to go down to the lower time frame. So 2 hours time frame, for example, you can see we took out this trend line, and it looks like a good opportunity to go long in my opinion, right? While it looks good, I would recommend waiting for a better confirmation, like more consolidation above this area of value, followed by a bullish breakout to the upside. If this happens, then this will be your confirmation to go long, right? So your entry is going to be at the break of that confirmation. Stop loss is going to be underneath the consolidation that leads to the breakout. Take profit target. First one could be around its highs, second one around its highs, and third one all the way to at this area of resistance, right? So this is how I'm going to trade crude oil. Okay, first case scenario. So second case scenario will be waiting for a retest. I'm going to show you what I'm talking about in a minute, right? So when I say waiting for a retest, it simply means I'm going to wait for this. Give me a minute. So I'm going to wait for price to consolidate a little and then come back to retest this area of value. So if we retest this area of value, get a good reversal bounce like what we saw on Nasdaq and US500, then that could be your confirmation to go long, right? So your entry is going to be around the breakout from the retest. Stop loss is going to be underneath the retest, and take profit target, as I explained earlier. First target could be here, second target could be around its highs, third target could be trailing your position till we get to this area of resistance. So that's how I'm going to trade crude oil. It doesn't look bearish to me in any way. If my sentiment changes, if the chart changes, the market changes, as it's ought to do, right? It could change to give us better confirmation of a long position. It could change to give us a bias for a short position. But I think I'm going to stick with my bullish bias right now. If we are going to, go bearish, I'm going to share my thoughts in our Discord community. Once again, if you're not part of our Discord, use the link in the description below to join. It's totally free. If you're interested in learning trade forex like a professional, want to learn how I do what I do, analyze the chart, see it from a clear and unbiased point of view, get our complete forex trading course. It's going to help you a lot. I have the link attached in the description below. That's it from me, guys, this week. See you next week.